Hello and welcome. My name is Joe O'Mara. I'm the head of aviation finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Paul Sheridan, who is the CEO of AMCK Aviation. Paul, thanks for joining us today. Maybe before we get into the meat of the questions, do you want to tell our watchers just a little bit about AMCK?
Sure thing, Doug. Hi, everybody. So AMCK Aviation, aircraft leasing company based in Dublin. We've been around in different forms since 2014. Originally, it was Accipiter and Vermilion, and then the Accipiter and MCAP management platforms merged just over 12 months ago to form AMCK Aviation. So we have offices around the world with just around 130 aircraft under management and an order with Airbus for 20 aircraft starting deliveries in 2024. Part owned by CK Asset Holdings in Hong Kong and Mitsubishi Corporation in Japan.
Thanks, Paul. And Paul, looking at obviously a broad breadth of customer base across different geographies, I should say we're recording this in the first week of January. Taking the course of 2020, maybe really taking from the pandemic became a worldwide issue in March, how was customer performance evolving over the back 9 months of last year? And what differences did you see in the various geographies in which you operate?
I think it's fair to say we've had the complete spectrum of performance. It started really, I think February of last year was our first deferral request from airlines in China, which we granted and then realized they were going to come from everywhere else in the world. And bit by bit over the course of the year, we started to get more and more, but not from every airline. And then, the airlines in mainland China, as we've seen from their performance over the last number of months, got back up and running and got back with a lot of domestic flying and repaid all of their commitments in full. The rest of the world wasn't so fortunate in terms of their performance. Not all their fault, of course, because the virus just was not controlled anywhere else. And so, we've seen airlines having to come back for more, airlines, fulfilling their obligations around the world. Europe is pretty much still shut down, as we know. Most of the countries have shut down, and that also then leads to the same kind of reduction in flying. In the Americas, there's more flying. There's a lot of talk about the amount of flying done over Thanksgiving and Christmas in North America, and we've seen similar in South America, but all still very domestic and regional. I guess is the theme that we've seen there. And then in the ASEAN region, it's probably been a little bit under the radar that some of the flying numbers have been pretty poor because the domestic flying, obviously with a lot of smaller countries or countries that don't have very many domestic airports, has not been there, and then a lot of borders are shut. And so you've just seen, when you break down the numbers into those three categories that people talk about of domestic, regional, and long haul, you've got three very different stories there with quite a lot of domestic flying in a lot of countries, a bit of regional flying, but really dependent on how borders are open, and then practically no long haul flying anywhere.
And how have the requests evolved, or have they, right, with you and your customers? If you think about initial deferrals, has that turned into something more complicated? And you mentioned China, you've kind of unwound those kind of concessions you granted at the outset of the crisis. When you're dealing with more complicated jurisdictions, how have the requests from your customers evolved, and how are you managing those?
It's really been very case by case, and one of the, I guess, odd outcomes or positive outcomes of this has been how well we've gotten to know our customers and how much more in depth we've been able to have discussions with them to understand their business, understand what they're doing to manage the crisis. Because as you get the second requests, you do have to ask for this information. You have to get this information to understand whether you're just opening up a black hole, whether people are going to be ultimately able to repay the money that you're effectively lending to them. We've tried not to overcomplicate things too much ourselves. That but if airlines are saying that they can't pay for 12 months, for 18 months, it's a pretty big thing, and so you do need to either try to get something in return, try to figure out how you can work with them, try to figure out what the best thing is. Number one, to make sure you protect the asset that you own, and number two, to support the customer who's asking you.
And then looking, we've seen, given the scale of the crisis, actually relatively few airline failures, relatively few. Has that surprised you? And do you expect to see more airline failures as we look out over the next 6 months of this year?
It has surprised me a bit, yeah, that we haven't seen so many, especially among like any smaller airlines, because they're naturally going to be more vulnerable to just reductions in, or complete cessation of any sales, so that you don't get any cash coming in. Government support has been a big thing, but it's not universal either. So I think airlines have done as good a job in a lot of cases as they could to manage this, to stop the flow of money going out. But you can only do that for so long. There's the Ernest Hemingway quote of how do you go bankrupt? You go bankrupt in two ways, gradually and then suddenly. So, there's a lot of vulnerability still in the system. And outside of a successful vaccine program and reopening of markets, then I think, yeah, we will see more bankruptcies in 2021, or more government stepping up, because the reality of air travel is that it is a vector for spreading the virus around, and there's no getting around that. Flying was still safe, but flying has always been the safe part. It's what happens afterwards when everybody gets off the plane that the risk starts. So if governments are going to restrict flying, they should be supporting the airlines to compensate as they allow other parts of the economies to reopen.
And when you're looking at potential new transactions, how challenging is it now assessing a new deal and trying to, come to the debt side in a second, but looking at the airline credit side, what kind of metrics are you delving into? And has COVID significantly impacted those, either bringing in new metrics or how you prioritize your customer check?
In some ways, yeah, it has. I mean, it's changed how you have to look at airlines, because everybody has got restricted cash coming in. They're not filling their planes, they're grounding aircraft. And so you do have to look at how resilient they are, their balance sheet. But that's something we've always done. We've always been on the more conservative side when it comes to airlines. We've always wanted to deal with the airlines that have the really strong underlying businesses, that are really strong in their markets. Our top customers, Wizz Air, Indigo, Frontier, American, are all in those categories. And so that's something that is not going to change either side, because government support is also a critical part at the moment. But you can't underestimate how important it is to have an airline that knows what it's doing and that can manage its business really well, because they are the only ones who will really survive and thrive in the long run.
And looking at the other, in having these types of conversations and talking to my own clients, one of the challenges is there in both assessing airline credits, but also then the debt side, which seems to be extremely challenged at the moment. If you take out maybe some of the very large players who've had that ability to continue to tap the unsecured market in a very impressive way entirely over the course of the crisis, but the aviation banks seem to have retrenched a little bit. What challenges do you see on the debt side, and how do you see that opening up to kind of allow transactions to kind of get flowing again?
Well, I think if I take part of what you said, the ability to raise money in capital markets during 2020 was really impressive. And given that it's the first time that the leasing world has been raising money in a crisis, given that market really only got going properly in 2009, 2010, coming out of the financial crisis, it's just a really good sign, and probably something we should be shouting from the rooftops a bit, that lessors are able to raise money. Over that period of time as well, lessors have become less reliant on commercial bank debt. And so that's going to help, that diversification that got people or lack of diversification that got people into trouble probably in 2008, is not going to be as much of a factor now as it was. And I think the lack of bank debt is more likely to affect the trading markets for some smaller lessors, newer lessors, or more structured vehicles that rely on non-recourse debt to make their purchases. They're going to really struggle to raise debt at any kind of price. And we've seen some of the pricing just in kind of speculative trades or offers are almost based on no debt at all, just pricing entirely to an unlevered return. And that's probably going to be the case for the next 12 months at least. But at the new end, the primary end, ourselves, others, we're not reliant on commercial bank debt. And so that just removes a huge variable out of the equation.
But do you see it being a blockage in the system? If you think, the lessors that are focused on newer tech, younger aircraft, by extension, they need to trade. They need to move the older fleet on into the secondary market. The bank debt piece would seem to be a significant challenge in actually allowing that to happen. Is that a fair assessment?
It is, yeah. And we've seen it before. But I think it'll probably be a bigger scale this time. But in '08, the talk was of a funding gap, and people were worrying about a funding gap being for new aircraft. But it turned out that it was in the trading markets that the funding gap applied, and there was practically no trades happening in 2008 and 9. And then as some of the new platforms got going with really strong backing, they were able to unlock a lot more money. But '08, '09 trades of older aircraft were just non-existent because the bank debt wasn't there. And so we'll see something like that again. It'll be done in smaller numbers, people who can pay cash. There'll be opportunistic sales, that kind of thing. But portfolio trades are pretty tricky to manage right now, not just from the debt side, but debt is a huge part of trying to make them work.
And that '08, '09 comparison actually is interesting when you look at maybe the ABS market. I know it's not a market you guys have gone into in the recent past. It's kind of interesting in looking at that now, where we have something that's fundamentally different to the financial crash. You don't have that huge erosion of wealth. And actually the ABS market as a whole is shutting. Now, the aviation ABS market is closed, but the broader ABS market is alive and kicking. Your thoughts on when we might see that channel reopen up to aviation again, and the importance of it coming back, like to put that capacity back in the market? What are your thoughts on that piece?
I think it's been consistent. 2001, 2008, the ABS market disappeared, and it's a market that naturally will have people coming in and out. The I guess rent collection is probably going to be one of the key points. What happened in '01 and '08 would have been slightly different, and structures evolve and to deal with the crises that have been thrown at it in the past. But this one started because of rent collection, and so if that gets solved, and if assuming rent collection comes back to decent levels through this year, then notes will start to get repaid, and people will start to be able to put some of this behind them and see a way to make the market reopen. But it will take a little bit of time, and it's inevitable that in structured vehicles where they're reliant on a set of events happening, like, well, say a set of events, calling rent payment is probably understating it a bit, that a market like that will probably retract a little bit when rent collection is down so much. And how it comes back, in the past, has always come back in a slightly different form, slightly less complicated form in a lot of cases. But it is important to have, because it's a really important sales channel for people. It's an important way to get investors into the market in a way that they can analyze deals, they can look at deals on a very consistent basis. The fundraising on the debt side is very consistent as well. So people understand it and can get to know it very quickly. And so it is, it's a really important aspect of the trading market.
Flipping gears there, and maybe in looking at the OEM side, Paul, you mentioned the order you've placed with Airbus, which is kind of a new venture for you guys to move in towards. How do you see the crisis impacting the interaction between aircraft lessors and OEMs?
I think it'll cement even more the idea about lessors as partners to the OEMs, that we are the biggest, a huge block of buyers of aircraft from all the OEMs, and that as the airlines start to maybe run out of some of the options on the debt side over the next year or so, start to look at shoring up their own finances and look to do more sale leaseback, that lessor purchasing will probably be even stronger as the OEMs start to reopen their deliveries in the next year or two. And so the importance of lessors will become even stronger than it has been in the past. And then the other side of it on the order front is, lessors stepping up and taking delivery, getting the aircraft placed, finding the new markets, that kind of thing is always a little bit of a, depending on how you want to look at it, healthy or unhealthy tension between lessors and OEMs when it comes to placing aircraft. But that kind of partnership is going to have to develop more, because it's such a crucial part of both business models of OEMs and lessors to be able to find new markets for aircraft, that I would hope that partnership will deepen.
And on the metal side, what drivers do you see that COVID will result looking on the aircraft side in relation to retirements on an accelerated basis or not? And how do you see that feeding in to the financing market?
I think it will, especially for the next few years, really focus attention on like the elite aircraft in the leasing world. You know, the 321 Neo, 320 Neo, 737 Max 8, to the expense of a lot of the other aircraft types, because they are going to lead the recovery. You know, we've always been much more wary about investing in wide-body aircraft, and it's easy to say, "Oh, we were always right," because we weren't always right about it, but we're definitely right about it now. You know, wide-body aircraft are going to suffer a lot more. They're going to be a lot harder to place. If you've got the right credit and you're going to get to the end of your lease, then you might do okay as long as you price that residual in okay. But you know, anybody who's taking back a wide-body now knows how hard it is to place those aircraft. And I think that will feed back into investor appetite. You know, we'd seen the gap in returns people are expecting for wide body just narrow to get close to the narrow body return rates. And so that will go back out again, I would say. And it really focuses the mind on, you know, it's always been drummed into everybody, you know, leasing is an asset business. And in a boom market, it's very easy to forget some of these things. And also, once the crisis hit, you know, a bunch of the real core tenets of what makes leasing work kind of fell away because nobody could pay anything. You know, diversification suddenly didn't mean a huge amount. Priority of payment from the airline side didn't mean a huge amount. There were a whole host of things that just disappeared, but asset choice was one thing that's been a constant. And having, you know, the modern assets, the assets that are core to the airline business and core to getting them out of the crisis has been the real key to making sure that you can keep your aircraft flying, keep the number of aircraft that you own in active service, and making sure that as the airlines start to restructure, that they're going to keep your aircraft.
We talked around the airline distress piece, Paul. There's a logical follow that if you have a lot of deferrals coming in and a cash flow impact to the lessor, that distress will follow the lessor side. The only one we've seen on a public basis so far is the Nordic scheme arrangement on the kind of standstill on their debt repayments. Have you been surprised we haven't seen distress hit harder into aircraft leasing? And how do you see that playing out over the course of 2021?
I think once we established over the, say, by June, July, that total rent collections weren't as bad as people might have feared, then no, I wasn't surprised, because one big feature, and it's been consistent for the last 8 or 9 years compared to what was leading into the financial crisis, was that leverage rates are not that high at lessors. You know, the only lessors who have what might have arguably been high leverage rates are ones with very strong parent backing, and are not that risky when it comes to refinancing, anything like that. So the dependence on cash flow to repay debt is way lower than it had been in the past. And then coupled with, you know, when you look at what people are saying they're collecting rent-wise, you know, I think in April and May, there were a lot of stress test forecasts that were way lower than this. You know, people were wondering, what happens if I only collect 50%? What happens if I only collect 40%? And so that hasn't happened either. So the robustness of the lessor balance sheets, coupled with that better than expected rent collection, is probably going to mean, absent another huge shock from nowhere, that I don't think we will see in any kind of established name lessors. But when it comes to more structured vehicles, maybe ones that are reliant on non-recourse debt but not much else, then you might start to see some if they get unlucky, I guess.
And obviously distress also will give rise to opportunities. We have a huge dislocation in the market. What opportunities do you see out there now in aviation finance? And do you think this crisis could potentially drive transformative change, be that in, you know, significant M&A and a reconcentration of lessors, or an increase in the overall percentage of leased assets? When you look at the market on the opportunity side, what are you thinking?
I think so far for the last 9 months, it's been a very, very constrained market. So, you know, Boeing deliveries clearly have been very low. Airbus deliveries got reduced quite a lot, and reduced to, you know, the airlines that are the top customers for everybody, so that they don't have any difficulty in attracting a lot of a lot of offers. So the key when it comes to the opportunities and how it develops will be what happens when Airbus try to deliver back to 45, 50, 55 a month. And once the MAX is recertified and flying everywhere, because then suddenly you're going to have a lot more supply in the market and you're going to start to really see how things are shaking out. Because to be honest, lease rate factors have gone up, yes, and purchase prices have gone down a little bit. So deals are much more attractive than they were, but they're still pretty heavily bid and still pretty competitive. So there are no slam dunk deals out there right now, but that's also because of some of the constraints in the market. So I think we'll see as it develops and as there's more supply, you might start to see some of those better deals coming out again. M&A wise, again, nobody seems to be forced to sell just yet. So I think longer term, for sure, it will accelerate some of those trends towards larger lessors, people coming together in larger numbers. But I think that's going to be a bit slower. I think, unless you're really forced to sell, and then given the financial backing of most of the top lessors, that's not really a big factor. I think it'll be a bit slower to see too much M&A.
I ask you on the investor side, if we assume COVID will be a blip, and the question is how deep and long that blip will be, there'll still be billions of capital that will have to be funded over the medium term. Where do you see the investors coming from to fund the metal in the future? Do you see it from the pool of the expanded pool of aviation investors that has built up over the last decade or so, or do you think we'll see a new entrance into the space, kind of driven by the sense of opportunity that might be out there because of COVID?
I think it's still going to be dominated by the existing players. I mean, that pool is very large. Let's not forget. There are a lot of players in all aspects of the market, from new to old. Whether they're Chinese bank-backed, Asian conglomerate-backed in our case, Japanese banks, US PE, insurance funds, public funds. There's a huge number of different types of player who've been investing in aviation and aircraft leasing for the last 8 or 9 years. And so the capacity within that group has always been more than the total number of deliveries in every year, as we've seen. So even though people will be more cautious, people will price things in a lot more, the debt will be harder to find, you still have to be very confident that there's plenty of capacity in all those groups to fund the deliveries that come. And that might restrict the real killer opportunities that would attract new capital in. I'm sure a lot of people will look, and we'll see how we go. Talk to me in 12 months' time, and we can see how 2021 goes and how the opportunities develop. We did joke a lot last year, the year before, or 2 years ago, I should say, really, that the benefit of a downturn will be that instead of 30 competitors, you might only have 15, and that so far is actually proven to be true. So that there's still a lot of competition, even if it is more cautious.
And how have you seen investor sophistication develop, even ignoring COVID? As you say, we've seen that expanded investor base. How have you seen that investor sophistication develop, and where do you see their focus being if they're looking at investments? Is it around the metal? Is it around the airline credit? Is it on the lease managing partner? Where do you see that?
I think a huge amount of attention will turn to the lease management partner. The investors are very sophisticated beforehand. We knew that, but then also just understanding the leasing market, and when you look at ABSs, you look at the way people are analyzing them, there's really no gap between how we would look at a deal and how a lot of other people who from outside the market would look at it. But I think this crisis really will focus attention on the asset managers, because placement of aircraft is going to be our #1 challenge for 2021. Having a competition from a lot of aircraft on the ground ready to go is going to be really tough. And so the lessors who have the airline relationships, the ability to move aircraft, the ability to deliver them on time, are going to start really differentiating themselves when it comes to new investors, either through ABS or other structured vehicles or JVs or any kind of investment. And I think that it's long been an industry mantra that it's easy to buy, and It's the rest of it's the hard part, and this is going to prove it for sure.
And then just another topic that's probably taken a backseat, understandably, over the course of 21 as airlines focused on survival, but will return as around ESG, sustainability, climate change. Do you see COVID impacting on the nature of that discussion in terms of aviation? And do you also think that the aviation sector as a whole, and I take in that the aircraft lessors, the OEMs, the airlines, are doing enough to get out the good things that are happening and the efforts that are being made on the positive side to try and manage that issue?
I mean, I think it is already happening. As ever, it's often a European-led initiative, but government money is not coming without strings attached and without environmental-related strings attached. I mean, it has to happen, and if we all calculate our carbon footprint this year, we'll see the difference between this year and last year. When it comes to the leasing world and the aviation world getting ahead of it, I think there's still a lot more to do, and it's to meet the challenge that is coming, which is when does aviation become considered a carbon investment? We've seen very high-profile pension funds over the last while coming out of carbon emitting investments. That trend will continue, and more will start saying they're not going to do it. And then eventually, at some point, if aviation becomes in that group, then we have to, we'll have a big problem when it comes to attracting investment. And how we meet that and how we, I guess, deal with that is going to be very difficult, because there's no getting around that you're financing aircraft, and they are on their own for a lot of people who fly a lot. They're by far the single biggest contribution to their carbon footprint. The argument that, well, look at data centers, look at these other industries, look how much more they do, is not really a good one. And it's just not going to work, and it's going to become less of a good one over time. So I don't have what the answers are, but I think there's still a lot more work to be done on this.
And just in closing, Paul, as we sit here in the first week of January, as we enter another lockdown and our comrades in Europe are facing the same situation, what are your optimism levels? So if you think and you look out over 2021 with your AMCK hat on, how hopeful are you for the year ahead, or not?
I'm pretty hopeful. I think we have placed all our bets on the vaccines. And without those, if you try to imagine prospects for aviation in 2021 with no vaccine program anywhere in the world, it's too much to think about. But, the vaccine programs themselves, people are going to win Nobel Prizes for these things. It is unbelievably impressive how quickly a number of vaccines have been developed, taking different types of technology, different ways of producing them and getting them out and into the market this fast. And so we're right to place all our bets on this, but that's going to, once that starts to work its way through the world, people will start to be able to regain confidence to fly. I think you'll see a lot of at least leisure and travel and just discretionary personal travel demand increasing once people get vaccinated, and once people start to see that lockdowns can be reduced when the vaccinations happen. But it'll take a bit longer for business travel to kick off. But I think once the vaccination programs really kick in, once lockdowns get taken away because of vaccination programs, people are going to get on planes very fast.
We hope that follows through very quickly in 2021. I'd like to thank you for your great insights over the course of the conversation, and wish you and AMCK all the best over the coming year.
Thanks, Joe. Thanks, everyone.